Well, good morning, good afternoon, and good evening. On behalf of everyone here at SCS Global Services, I'd like to welcome you to today's webinar. I'm your host, Tom Ehart, SCS's Corporate Marketing Director, and our moderator today is Karen Righthand, SCS's Managing Director of Corporate Sales and Marketing. Karen, thank you for joining us today. Before we introduce our topic and today's guests, I'd like to take a moment to update all of our listeners on our event platform, GoToWebinar, and how to engage with the speakers. To avoid any unnecessary background noises during this presentation, all attendees have been muted. This is a one-way presentation for the duration of the event. If you would like to ask a question, please go to the question section in the control panel on the upper right-hand side of your webinar console. Once you type your question and hit send, your question will be delivered to the panel for review. Depending on the time remaining at the end of the presentation, we'll make every effort to answer all questions submitted. Any questions that we are unable to answer will be responded to after the event by the member of the panel. A recording of today's webinar will be made available to all attendees and registrants after the webinar has concluded. And with that being said, Karen, this is the last in our three-part webinar series called Navigating ESG, and I'm excited to be able to bring our discussion full circle. In the last two webinars, we laid a solid framework for mapping out a corporate ESG journey and selecting the right sustainability reporting structures. And now we're taking the final step to showcase how companies can provide all of their key stakeholders with a report assurance that completely verifies their data. But I don't want to give too much away as we have an exceptional panel of guests with us. So Karen, over to you to introduce today's speakers.
Thanks, Tom. As we come full circle on our webinar series, I'd like to introduce our first guest, Jim Close. He is the Senior Sustainability Analytics Lead at Owens Corning. As you heard in webinar 1, Owens Corning has been on the road to increase transparency for some time, and Jim has contributed on the sustainability metrics team for many years and has seen the progress of their reporting and assurance initiatives over time. So welcome, Jim. Next, I'd like to introduce Shannon Seart. She is the Manager of Climate Strategy and Sustainability Initiatives at Hewlett Packard Enterprise. Hewlett Packard Enterprise has a long track record of assurance, and we'll hear from Shannon firsthand how assurance has benefited their transparency initiatives. Finally, I'd like to introduce my colleague, Neil Mendenhall, Director of Service Development at SCS Global Services, and a licensed AA1000 assurance practitioner. Neil has been with SCS for over 15 years and brings a wealth of supply chain experience to his perspective. For those of you new to SCS Global Services, we are a full-service sustainability, food safety, and auditing certification and verification body that has been a pioneer in the sustainability space, working for nearly 4 decades to advance sustainability in order to ensure a healthy planet and thriving economy that works for everyone. And as I mentioned in our last webinar, new to SCS is our consulting organization, whom we heard from in the first 2 webinars. They are an independent entity capable of helping you with your sustainability questions and initiatives without creating conflict of interest on the SCS Global Services certification side of the equation. With that, I'm going to turn the reins over to Neil, Jim, and Shannon. Please don't forget to submit your questions as they come up. I'll be monitoring the questions and we'll moderate them after the presentation. Thank you.
Thank you, Karen. This is Neil Mendenhall, Director of Service Development. Thank you all for joining today. This is the agenda and the objectives for our presentation today. We're going to discuss what sustainability report assurance is, why you should get your report assured, and then we're going to go into the 2 main standards that we use for our assurance practice, AA1000 and ISAE 3000, and go over the typical assurance engagement. The objectives for today, therefore, are to get to know a little bit more about the standards we use for conducting assurance, understanding the benefits from getting your report and other disclosures assured, and then to learn more about the assurance process in general. So first of all, what is report assurance? it basically is these two factors. Are you reporting on the right issues? This would be the material issues to your company. And is the information you're reporting right? So if we unpackage this a little bit, it's making sure that the report and the reporting that you're providing to your stakeholders is material to them, is in their interest. And then that the information that you're reporting to them is accurate, so they can make better decisions, whether it's investing in your company, coming to work for your company, or any other issue. Assurance engagements typically include a defined scope. So that means, are we just talking about your North American facility? Are we talking about your global operations, or just one site? It'll also talk about what's included in the assurance and what kind of data that we're going to be looking at. We don't, as we'll learn later, you don't have to include the entire report in your assurance engagement. We'll look at both quantitative and qualitative information that you have in your report. And then we'll work to gather evidence to support our findings and conclusions. And this evidence includes interviews with management and staff, and in some cases, even external stakeholders. It'll be on-site observations. At certain levels of assurance, we go out on-site and look at your management systems in practice. Then document review. This will include your policies, procedures, records. And then also, of course, we look at data. So this is the data you've collected, you've aggregated. We'll look at the calculations behind that data that you're presenting to make sure that it's accurate. The final deliverables are a final report to management that can be kept confidential if you so choose, and it has all the details of what we did and how we did it. And then there's an assurance statement that typically goes in the back of your sustainability report. And this is essentially an executive summary of the report to management that at a high level goes through the scope, the methodology that we went through, and any findings and our eventual conclusions. The main drivers of report assurance as they stand now is really the investment community. They want to make sure, or they want to be assured that what is being reported by you is relevant and accurate. So this provides them with a better understanding of risks as far as their investment. And then also a lot of the rating agencies that these same investors use, for example, CDP, RobocoSAM, Dow Jones, MSCI, ISS, Bloomberg, there's a number of them. This is just a few of them here. The ratings that you receive from these agencies go up typically when you include assurance, because therefore they can, based on their research, they don't have to do their own sort of additional due diligence. They can rely on the information that you provided them and rest assured that it is likely more accurate. So this increases their confidence and then leads to better stakeholder relationships and higher investment opportunities. So we're talking here mostly about the assurance standards we use. This is AA 1000, ISAE 3000. Those are the standards that we as an assurance provider use to conduct the overall assurance engagement. The standards most common to reporting, companies that are reporting, are the reporting frameworks themselves. This is the Global Reporting Initiative, GRI, and SASB are the two most common reporting frameworks. So typically, a company will put together their report based on GRI or SASB. That tells you, what needs to be included to say that your report is compliant or in conformance with the GRI framework or the SASB framework. But we ourselves run our insurance engagement by these other standards, AA 1000, IS AE 3000, that we'll go into a little bit more detail here. I will say that as a part of the scope of our assurance engagement, we can evaluate your conformance to GRI or SASB, and that's commonly included in the scope of our assurance. So a little bit about the main standards that we use today. AA 1000, it was put and developed by Accountability. They are a nonprofit based in the UK. The current version of that standard just came out in 2020. It's version 3. At the time in 1999, when they first put out that standard, it was kind of the first of its kind. And GRI actually came out of some of that early work done by Accountability. It's also part of a suite of sustainability standards. So there's not just the assurance standard. There's also a principles standard, which is sort of the core 4 principles that we'll talk about in just a minute. And then there's also a stakeholder engagement standard, which can be very useful for companies trying to do a better job with their stakeholder engagement. Last part is that Accountability does require that to assure to their standard that the practitioner is licensed with Accountability. The next standard is IS AE 3000. This was developed by the International Standards on Assurance Engagements. It is essentially, it was developed by the accounting profession, and it's for professional accountants, but it can be used by any qualified provider. It's primarily used to assess accountability expectations, which include transparency, responsiveness, and compliance. And again, this is, as it has in its very long title, it's specific to non-financial information and specifically non-financial historical information. So anything that meets that definition can be assured to the standard. So what are our objectives as the assurance practitioner? Essentially, they're to obtain a reasonable, or we'll say high level of assurance, or a limited or moderate level of assurance about whether the subject matter that you're reporting is free from material misstatement. So we're going to go through our process. We either do it at a high level, which is in a lot more detail and looks at records from individual sites, or a limited level, which might stay sort of at the corporate roll-up level and might not do a lot of additional digging. And those 2 levels of assurance and the methodologies behind them will lead us to make a conclusion at the end of the day regarding whether we believe the information is free from misstatement or not. I will say that this process generally, it does not start once you publish the report. So this is an ongoing process that can go through several months, where information can be provided early on in the engagement process before it's finalized and reported. So we can provide initial findings and gaps that can be rectified and closed prior to reporting in the final report. So the AA 1000 assurance standard, there's 2 types of engagements. There's type 1 and type 2. Most companies go to type 2. Type 1 is just that you assure a company to the 4 main principles of accountability. It's typical that you go to a type 2, and a type 2 means that you're, in addition to those principles, you're also looking at specific performance criteria and auditing the accuracy of that. So for example, greenhouse gas scope 1 and 2 emissions. Again, it does require type 1 or type 2, if you're assured of the standard, that you meet the AA principles of sustainability. You can do the assurance to both a moderate or high level. So again, as I discussed before, the moderate level is a little less digging into source records and documents, and the high level is where we go back to some of those original records more and do more recalculations of the data. We can also, under this standard now, assure economic and some forward-looking claims to that lower moderate level. That's somewhat of a departure from the accounting standard that really only allows you to look at historical information and doesn't really look at economic information because that's financial in nature. Here are the 4 principles of accountability. So the first of which, if we look at the top, is inclusivity. So this essentially means that people should have a say in the decisions that impact them. So this is, stakeholders. This is internal and external stakeholders that are somehow impacted by your organization's operations. So that you should be inclusive of their, opinions and decisions, and include them in decisions you make about your own operations. Then the next, if we go down clockwise, is materiality. This is that decision makers should identify and be clear about the sustainability topics that matter. Essentially, this is what topics are relevant for your company in regards to their impact on society and the environment. So, for example, some company that doesn't use any water may not produce half their report that talks about their, low flow sinks in their bathrooms or something. They should be talking about things that they use a lot of. If they have a lot of emissions, that would be greenhouse gas emissions. If there's a lot of waste, they should be including waste. And that there's a process by which you've decided which are the most impactful areas, and that you're reporting to your stakeholders on those impacts. The next one is responsiveness, that organizations should act transparently on material sustainability topics and their related impacts. So a lot of meeting this is that you've gone through this process, you've included stakeholders, you've figured out what your material topics are that you should be reporting, and then you're reporting out to your stakeholders and giving them timely information about the middle principle here, impact. And so this is really key here, is that you're trying to quantify and measure and monitor your impacts, and in theory, mitigate the negative impacts over time. Next, I'm going to let Jim Close of Owens Corning provide a little bit of detail about their assurance journey and where they are today. Jim?
Thanks, Neil. Owens Corning is a manufacturing company based in Toledo, Ohio. We have 3 main businesses: roofing, insulation, and composite glass. You may or may not be familiar with our spokes cat, the Pink Panther. Early on our sustainability journey, and we've been on it for a while now, it became clear to us that if we were going to have goals, sustainability goals that we were going to measure progress against and report publicly, we really needed sustainability data to have the same rigor, transparency, and data quality as our financial data that we report. So it was kind of logical to move on to getting the data assured. And as Neil mentioned previously, one of the main reasons for doing that is external confidence to your stakeholders. And in addition to that, though, we wanted to get internal confidence also that our processes are strong. Having an independent third party with experience doing this, like SCS, when they review your information, it gives you confidence that you're doing something right. And we started out by looking at, okay, what was material to our company? So we started with energy and greenhouse gas emissions. That was the first things that we had verified. And then we slowly moved on to water. We added water, we added air emissions. We also started adding selected social KPIs. again, this is definitely, as this bullet point here says, prior to 2018. One of the reasons we did that is, we've been involved with Dow Jones Sustainability Index for some time. We've been in the World Index for 2020 was our 11th straight year, and there are requirements for Dow Jones for things to be verified or assured, and frankly, we wanted to try to get out ahead of Dow Jones and other requirements. So, it became clear that transparency was not a passing fad. So we started adding things like our CEO ratio. This is a few years ago, before it was required in your SEC filings. Safety data, workforce data, like male-female remuneration is one that's in Dow Jones. Community impact. So we started having those added. Again, not all at once, but every year we tried to add something new. And a few years ago, we decided to go down the path of the AA1000 assurance. Our reporting is designed to do, our sustainability report is designed for more than one audience, I guess. The first purpose really is to tell our story, tell the story of Owens Corning and what we're doing in sustainability. But the second part really is to address all those disclosure requests that Neil had listed, and many others aside from CDP and Dow Jones. It's the UN SDGs, it's SASB, it's TCFD. It's anything from investor requests to frameworks. So disclosing the full report, we felt like was the obvious next step, because our goal has been, even since moving to AA1000, has been to try to increase our scope. So now that we've got the whole report verified, the next step in the journey is really saying, instead of what can we add to the assurance, what elements can we move to a higher level of assurance? As I said, transparency is not a passing fad. We know that it looks like we're going to have this continued pressure or expectation that we're going to have increased transparency and we're going to have increased assurance expectations. So that's where we are at this point, is to say, okay, what can we move up to a higher level of assurance? It wouldn't surprise me that Dow Jones, for instance, and maybe other organizations would start awarding more points for a higher level of assurance. Instead of just having a one, are you assured? They're now asking, at what level are you assured? And so we feel like this assurance, especially AA1000, has really been an important part of the recognition that we received over the last few years. I mentioned the Dow Jones, we've been the building products industry leader for 8 straight years. We were able to have we were the first in August of 2019, we're the first US industrial company to have a green bond offering. And we've been 3BL Media's best corporate citizen for 2 straight years. And I don't think we would have had that level of success if we did not have the report verified at this level of standard of AA1000. So I'll send it back to you, Neil.
All right, thanks, Jim. The Owens Corning assurance statement, if you would like to see it, there is on their website. It's fairly prominent. Their whole report, I think, and the statement is at the end. If folks want to take a look at that.
Yeah, there it is.
Yep. All right. So the next standard that we'll be looking at is ISAE 3000. So this one, again, as I mentioned before, by definition, this standard only assures historical claims of non-financial information. And there's no requirement to ensure that topics are assessed, that the topics that we assess are material unless GRI is part of the scope. Since GRI requires materiality, that would be looked at. But in general, the standard doesn't have sort of a principle of making sure the report itself has, material topics in it. It does have similar levels of assurance. They're called different. They're a little bit different, limited and reasonable. So limited is akin to the moderate and reasonable is akin to the high level assurance, which are essentially equal to the AA1000 standard. And next, I'm going to give a chance for HP to go into what their journey has looked like. We have Shannon Seart that can provide information about their assurance journey. Shannon?
Yep, thank you, Neil. So Hewlett Packard Enterprise, HPE, actually has a really long history of assurance. So we've undergone third-party verification on some indicators as far back as 2010. That was when HPE was actually a part of HPCO, Hewlett Packard company, which split around, I think it was 2015, 2016 into HP Inc. and Hewlett Packard Enterprise. So I'm speaking to the HPE portion of this. As of 2019, you can see that we have 11 indicators that are third-party verified. And the way we structure our reports is we actually have a report that tells the narrative of a lot of our ESG topics in our company. And we also have a data summary, which I've included a screenshot of the cover page, and also part of the assurance indicators that you can see to the right. In general, the way we prioritize what indicators that we will go through assurance are ones that are deemed material through a materiality process that we conduct every few years to figure out which topics are more important to a variety of internal and external stakeholders, and also any indicators that have public-facing goals. Next slide, please. Thank you. So benefits of verification, and I've broken them into internal benefits as well as external benefits. So on the internal side, going through third-party assurance really drives process improvement and transparency. Even after, more or less a decade of assurance, we still find ways to improve our data management, our transparency, our quality control. So it really inspires ongoing improvement as well as modernization of how we manage some of these data streams that are ESG, non-financial, historically perhaps a little neglected, but are of increasing importance. And also going through third-party verification really ensures that there is data integrity, even through many corporate transformations. So for example, the split between HPE and HP Inc., as well as, any type of divestitures or acquisitions, really, and knowing that those data or those indicators will be looked at by a third party, really focuses attention to ensure that you're getting the type of data that you need, that you will have good historical maintenance of that data, which is in a data-driven world becoming increasingly important. So it really just improves the overall internal functioning of the company. From an external perspective, this topic has already been touched on quite a bit, but it really builds confidence with stakeholders. So groups that definitely pay attention to HPE's indicators include investors. You can see our data, our ESG data that gets assured, and some that doesn't get assured on Bloomberg terminals. Our customers regularly ask for these types of metrics, and then obviously NGOs also pay attention to this information. And I think Neil touched on this already, but when you get the data verified, it does increase your scores and recognition in various ratings and rankings. HPE for the last 2 years now, we've been on the DJSI index for quite a while, Dow Jones Sustainability Index. However, in the last 2 years, we were recognized as an industry leader, and HPE, formerly HPCO, has been on the A list for climate for quite a long time, but this past year we also received an A for CDP on their water security disclosure. And we've also been, rated very highly in EcoVadis, but several of those other kind of ratings and rankings, MSCI, all of those are score HPE, and those scores are, again, readily available for investors to look at. So it really helps performance there. And then this last topic is one that's emerging that, going through third-party verification gives a level of confidence, strengthens the efficiency, transparency, and quality of internal processes. And again, this is for non-financial data that historically has not required any scrutiny from a regulatory perspective, but we're seeing that change. Hewlett Packard Enterprise is an international, a global company. We have around 200 locations in multiple countries, around 60,000 employees. So a lot of the non-financial reporting regulations that are coming out of the EU, for example, affect us. And we're also seeing that it looks like the SEC in the United States is considering integrating some of these indicators that we get assured into SEC filings. And so already having this data, have gone through third-party verification, having confidence in the quality and the processes of this data just prepares us for any regulations, when they emerge. And I agree that I don't believe that we're ever going to go backwards in terms of transparency. It seems that transparency for data is something that only increases. So getting in front of regulations is very important for us as well.
Thanks,
Neil,
Shannon.
back to you. Mm-hmm.
Yeah, thank you very much. And I think this is a really good point that you brought up on internal benefits, because a lot of people, assurance is just another word for audit, right? So they hear the word audit and, the hair on the back of their neck lifts up and they're like, oh, great. They're just going to tell us everything that we did wrong. But it really is a benefit. It should be looked at as, an independent body coming in and taking a look at your procedures and processes and making sure that they make sense. And this is another reason that, we should start a little bit before, your report is released. That's sort of the final part, but as your data and processes are being developed, and sometimes people are updating these management systems on an annual basis, governance documents, those can be looked at way in advance of the publishing of the report. We can start looking at early data that's coming in and being compiled, and we can really provide feedback in gaps to where we find that there might be something missing, or data might be being aggregated or calculated incorrectly, and where there could be process improvements made. And so this really should be looked at as a process by which we're helping you to improve and to be more accurate and more consistent over time, and not just coming in and auditing and saying you did the following things wrong, which is really not the point. It's all about continual improvement. So thanks, Shannon. Okay. So when are you ready for assurance? This is a question a lot of companies, I think, ask, especially when they're thinking about doing this for the first time. Essentially, it's similar to your overall sustainability program. You need to have buy-in from top management about, that this is something that's worthwhile doing. We're going to be conducting interviews of management folks and requiring information from them. So there needs to be buy-in from the top. Also, while not critically necessary, we feel that it is important that you've completed a materiality assessment. This again was talked about by both Shannon and Jim. It's a process that we talk about in the first ESG webinar. Essentially, it's going through a process to determine which are the most important topics for internal and external stakeholders in regard to the impacts that your company makes. And that you have management systems in place for each topic and corresponding disclosure. So essentially, it's like thinking back to college or grade school. You just need to show your work, and you have to have records of all of that information, because we're going to be looking at the final data tables and then going back and asking, how was that calculated? How is that rolled up into this final sort of corporate number or corporate disclosure? So you need to have access to those records and documentation for us to come away with a positive result. And then for high or reasonable levels of assurance, this is the higher levels to these two standards. When you think about moving to a higher level, you need to even provide additional data. So if you have multiple sites, we'll want to look at site level records and other evidence that might be rolled up at the corporate level, and kind of understand how that was compiled and aggregated. That there might be, in addition to that, there'll be often on-site audits of some of these sites. One thing that we do find with large organizations that are global is that oftentimes what's happening at the headquarters level is really tight. Everybody's following the procedures, but the further and further you get from the headquarters, and as companies grow through acquisitions and they have different systems in place, it can take time to get all the other sites to be sort of following the procedures as designed by headquarters. So oftentimes we'll be going to different sites around the world and just making sure that there's consistency. So how do most organizations get started with assurance? So some of the first steps for reporting is obviously they pick a reporting framework. Sometimes that's not just one, but multiple ones. GRI, SASB, and others. And then they'll start with the most material topics. So for example, greenhouse gas emissions is fairly ubiquitous given the impacts to and dangers of climate change. But you should be picking the ones that are most material to your organization through the materiality assessment that we discussed before. And this first steps for assurance, that you'd be assuring those material performance criteria the first year. So, you don't have to get the whole report assured. You should probably take baby steps and assure, the greenhouse gas emissions and maybe your water impacts if that's a material issue, waste. This is the typical ones that organizations start off with. In addition, some companies just want to understand, a little bit more in detail what this is going to be like, and before we sign on to an assurance engagement, which ultimately will have a conclusion, and they want to make sure that that conclusion is positive, companies will ask for a pre-assurance engagement, and this is not as formal, and there's no statement at the end that goes into your report, but there is a report to management, and it provides all of the gaps. And then those gaps can be, once they're identified, they can be evaluated by the company, and those can be closed over time and help prepare a company for a full assurance engagement the following year. So these are the typical assurance services that we see in the market. So this pre-assurance engagement that I just discussed, it's just to understand the gaps and to give the organization time to close those before they move on to the full sustainability report assurance. And again, the deliverable is a report to management with the gaps and opportunities for improvement. Then there's a stakeholder report assurance, which we've been talking about, and that Shannon and Jim have discussed, that they have their reports assured. This is usually can be a 3 to 6 month engagement process where we provide interim findings on management systems, and those can be actually fixed and corrected in the process of the engagement. And then at the end of the day, allows us to still give a positive finding for the overall assurance. The deliverables for that are, again, a report to management. This can be held confidential. It's a lot more details about everything that we went through, even some of the preliminary findings that were corrected. The assurance statement itself would only have any findings that weren't corrected during the process, so any remaining recommendations or opportunities for improvement or issues that were identified that weren't closed. And that assurance statement is typically, it could be 1 to 3 pages, and that goes in the back of the assurance, your sustainability report. And then there's specific stakeholder disclosure assurance. This is where, it might not be a full report, but it's some disclosures to CDP or Dow Jones or EcoVadis, where you're just focused on that. Maybe you don't put out, some companies don't put out a full sustainability report every year, but they disclose to certain key stakeholders every year, and they want that assured. So we can limit the assurance just to your responses to some of these agencies. And again, this would be a full statement and a report to management included in that as well. So if folks want to take a look at Owens Corning and Hewlett Packard assurance statements and their full reports, which I recommend, those are available online on their website. Owens Corning has completed their 2020 report just recently. Hewlett Packard is close, but right now they just have the 2019 available, but the new one will be coming out shortly. And that's it. Now we're going to have time for questions that were sent in during the presentation, and thank you everyone for listening.
Thanks, Neil. Appreciate that, and thank you, Shannon and Jim. And actually, I'd like to start with a question to both Shannon and Jim, which is, I'm sure many of those on the call are considering report assurance. And so the question that I would like to ask of both of you, and why don't we start with Shannon, is what have been some of your biggest challenges in moving through the assurance process? And I'm sure people would love to hear that. Shannon?
Sure. So I feel like every year with assurance brings like a new round of challenges to some extent. But some of the ones I can name just off the top of my head is data systems and kind of data integrity. I think a lot of companies probably start off with Excel files that get passed around. Maybe eventually you move to some sort of software system that has some more automated data feeds. Every now and then companies like to migrate to different data systems. And so if you're doing assurance in a year where there's a kind of a large change in that front, that is certainly a challenge. Also, I think institutional knowledge. So we've been fortunate for the last few years that a lot of the owners of various data streams have remained the same and gone through a few assurance cycles. But if you have folks with institutional knowledge that leave, or people that have gone through assurance that have moved on, and new people who have not experienced going through assurance, it's really important to reach out to them well before the engagement, just to set expectations, the type of evidence, or like the showing your work, the types of things that, and a third party, verifier would be asking for. And then the last challenge is if there's some data you are reliant on where it's not actually your company, but perhaps a supplier or a contractor of some sort. I think ensuring that their data integrity is of, that they're following kind of the same level of quality to pass assurance that you are. So you at times have to work, with your suppliers or vendors or whatever, to kind of set expectations and make sure that they're following the same level of a standard that your company, wants to be assured to.
Great. And Jim, can you tell us what challenges you've been involved with in the many years you've been working with assurance aspects over at Owens Corning?
Sure. So Shannon took a lot of my answers, but no, those were great. I can add a couple. One, we've had some years recently where we've had acquisitions, and especially acquisitions that occur maybe closer to the end of the year, because obviously they don't take into account our sustainability reporting when they decide when they're going to close an acquisition. That has been a big challenge, trying to, if you follow WRI protocol, trying to take, when we have a 2010 base year, we had 2010 base year for our 2020 goals, trying to get that information then all the way back to 2010 in time to do report, that was challenging. And another one that I think that's an ongoing challenge for us is the pressure, I think both externally and internally, to move up our report date. A few years ago, 4 or 5 years ago, when I've been in this role for about, or similar role for about 7 years, I think we were reporting in July. And last year we reported around Earth Day. This year we had our report issued on April 1st. As we continue to push that up every year, it's more and more challenging to get all the information ready. It's challenged us to make sure that our processes are really well defined and tight, and that procedure is tight as far as how we're going to get the information in a timely manner so we can do internal reviews as well as getting in a position for SCS to do that review. I think those are the two biggest challenges we probably had in the last few years.
Yeah, sounds good. Neil, a question for you. Which assurance standard would you recommend for a first-time assurance engagement?
Yeah, I mean, I'd say that the ISAE, not having to go through the evaluation of those 4 principles, which can go beyond just the report itself, can be a challenge for companies. So, and that's under the accountability standards. And so typically I'd say, again, like we said, baby steps, just verifying your greenhouse gas inventory. And that can be done to ISAE 3000. And you can kind of get in that way. And then over time, if you're looking for getting, looking at a more holistic approach, and auditing your entire report, or more information, or more about the overall sustainability practices of your organization, which would go into those 4 accountability principles, then you could move over to that standard at that time.
Great. So we did have a question sort of along those lines of how both HP and Owens Corning determined which standard. And I think, Jim, you spoke at the beginning how you started with ISAE 3000 and then sort of moved over to accountability. But I don't know, Shannon, if you had any further comments on your choice of ISAE 3000.
Sorry, had to take a minute to come off mute. I think, so right now the direction, I think we're happy with the standard that we have right now. I think, a lot of our metrics right now that go through assurance are very heavy on the environment side. We do have some social KPIs. So the conversations we're having internally, I think, is to expand the types of metrics that go through assurance. So it's more of a comprehensive kind of ESG narrative and strategy that has gone through assurance. And I imagine after that, then we will probably move to evaluating whether or not we want higher standards. So that's the kind of internal thinking right now.
Sounds good. Let's see. The next question, Neil, maybe you could take this one. To what extent do assurance criteria prioritize quantitative assessments over qualitative assessments? And can you describe how qualitative criteria are evaluated?
Yeah, qualitative criteria usually, is some statement that's made in the report, and we take it apart in different sections and try to find evidence for that being accurate. So for example, since HP is here, they have a qualitative statement about what they do for conflict minerals. And they say that they reach out, and I'm paraphrasing here because I don't have it in front of me, but essentially they say that they go through a due diligence process to identify, all in-scope providers of potential conflict minerals. They engage with them, they get them to fill out what's called a conflict minerals reporting template, and they get that back, and then they report on all the smelters and refiners that are in that. So they're not giving actual numbers. There sometimes is numbers in there, but they're basically describing the process that they went through. And then we go through and say, okay, did you reach out to all of these? Let's look at evidence. Let's look at the emails and communications that you had with these suppliers. What did they give back? Did you report accurately the information that they provided back in your report? So that we kind of pick apart, the statement, the qualitative statement, and then we look for evidence that's behind that.
Great. Jim, I've got a question for you. You mentioned that social aspects were added to your reporting over time, and based on the Dow Jones requirements. Did the requirements or the findings of your assurance review prompt you to change any of your social metrics and business protocols?
In the short term, no. But in the long term, I think so. I mean, I think it's, especially when we hadn't had, I don't know that some of those social metrics that we would have had any type of verification done before. So it's kind of new to those departments. I don't think we had an auditor necessarily review some of those things in quite that way before. So I think it certainly helped everybody understand exactly what type of backup needed to be preserved and in what way. And I think it helped us even as we set new goals. Is when we set 2030 goals, we started to have an idea of, okay, we need to make sure that this is how measurable this is, or how, I think we kind of grew up a little bit in terms of how we're doing some of the social goals to make them a little more similar, maybe to how things were already done in other areas like finance.
Great. Neil, are both of the assurance standards recognized by CDP and others?
Yeah, both the standards that we talked about today, the AA1000 and ISAE 3000 are recognized by CDP, and almost all of the other. Those are the two main ones that are often quoted. There's sometimes some other ones as well, but unless Jim or Shannon has any evidence, my understanding is those are recognized universally by most important stakeholders.
Great. And another question, which I think you touched on, but maybe a little more concretely, if someone is planning on releasing their sustainability report in April of 2022, at what point should they engage with an assurance provider to begin the process? I mean, yeah. I think some of that depends on how extensive the assurance engagement is going to be, but maybe you could talk about that a little bit.
Yeah, exactly. So if it's just looking at a couple KPIs or something like that, we don't have to start too early, but an engagement process like the one that we go through with Owens Corning, where we're looking at a big section of entire report, which is many pages. The earlier the better. Usually if you're going to release it at the end of Q1, you want to start in Q4 the previous calendar year, and that really gives us time you know, a lot of companies, what they do is they want to get out their report sooner and sooner, as Jim talked about. There's even awards that are given out for reports early in the year. So there's like all kinds of incentives that's trying to get people to report out earlier and earlier in the year. And oftentimes that means that, you know, Q4, some of the Q4 data is estimated and then corrected in the following year just to get that out. So what we're doing is we're getting sometimes data for the first half of the year. We're evaluating the systems and processes and the calculations in maybe that first 6 months of data that becomes available in Q4. And then there's going to be some similar findings and improvements and gaps that could be identified and rectified, and then we can wait till the final data comes through in Q3 and sign off on that. So, you know, it really behooves of someone to start earlier, because that gives them the time to catch gaps early on the process, correct those in advance of publishing the final data in the report. Because if you wait till right close to when you're publishing the report, there's just no time to implement what could be a big change prior to the report being published, and then, you know, the findings might reflect the lack of time there to make those updates.
Okay.
So,
the very last thing that I'll address, and we're about out of time, but of course there's a question that comes up about what are the largest driving factors that dictate the price for report assurance? And I think I can probably take that one. I would say, and how can a company better prepare themselves so the project doesn't get away from them? I would say that the assurance engagement, of course, depends on two main things. It depends on the number of things that we're assuring. So if it's just greenhouse gas scopes 1 and 2, that's a very different situation than an entire 200-page sustainability report with many different metrics, or it's a different situation than an entire GRI report. So the amount of indicators being assured is one factor, and then the level of assurance is also another factor. But in terms of preparing yourself and budgeting for this year over year, I think you look at what you need to do to increase your scope. For instance, with Owens Corning and with HP, we work with them to define what the scope will be for the following year, not that long after we finish the current year. And we start to budget for that. And, you would, I don't see that the budget would get away from you, because you would be dictating the indicators based on, where you're wanting to go, and you would know well in advance. I don't know, Neil, do you have anything to add to that?
No, basically I agree. I think, starting as soon as you can to kind of understand what the scope will be, and getting that proposed budget, and then starting as soon as you can in Q4, especially if we're looking at higher levels of insurance and more KPIs to verify, the sooner the better. You'll get more value out of it, quite frankly. So.
Great. Well, Tom, I think that's it for today.
Great, thanks, Karen. And I'd like to thank Shannon, Jim, and Neil for being our guests today. And thank you to all our attendees who listened in and asked questions. We hope you found this information valuable. Today's presentation has been recorded and will be sent out to all registrants and attendees within the next 24 hours. We hope all of you will be able to join us in a few weeks as we start our new webinar series for the summer. Until then, we hope you all stay safe and healthy. Have a great day.